Welcome to Financial Clinic, your ultimate guide to achieving financial success. Proudly sponsored by NCBA Bank. Join Sally Limo as she expertly shares invaluable tips and insights designed to empower you in reaching both your personal, business, and financial goals with NCBA Bank. Your journey to a brighter financial future starts here.
NCBA. Go for it.
My name is Ivan Juguna, Head of Trading at NCBA Investment Bank. So as Head of Trading at NCBA Investment Bank, my role entails or the responsibilities that I have encompass trading of securities, that is equities, fixed income and derivatives on the Nairobi Securities Exchange. We do also trade cross-border within the East African region. Secondly, I'm responsible for data analysis, maintaining existing customer relationships, as well as recruiting new customers to the firm. I'm quite passionate about equipping and empowering investors to make smart decisions, and that includes also giving them access to opportunities. And one of the ways we give opportunities to our investors is by creating linkages between capital and where the need lies, with the sole aim of spurring or stimulating economic growth. And it's good that you say that I'll be speaking about compounding and the power of it. And it is a paradox that if the mechanics of its operations are so wonderful that renders it as the eighth wonder of the world, the question then is, why aren't we all wealthy? So I look forward to the engagement and the ensuing conversation regarding compounding. Join me on Financial Clinic with Family Media on 30th of April, where we'll be discussing the power of compounding.
Tuendele. NCBA. Go for it.
Kote nchini matumaini, tujitahidi, tujivunie, tuendelee mbele, tuende mbele, 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 tuendelee. Twende mbele, 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 twende mbele, tuendelee, mbele, Kenya twende mbele,
Kenya.
tuendelee.
Twende mbele. NCBA. Go for it.
On the last day of April, this is 30th of April 2025, a very good morning to you wherever you are joining us this morning, watching or listening, and welcome to this Financial Clinic episode where I'll be talking about the eighth wonder of the world, where, as you heard on the previous clip, my guest is asking, if it's the eighth wonder of the world, how come we are not all rich? Get to know why we are not, or why we can be rich. We're talking about the compounding interest, the power of compound interest. And my name is Sally Limo. With me in studio, I'm joined by amazing ladies who will be taking us through, this topic, helping us understand and unpacking it in a way that you'll be able to understand, you'll be able to benefit. So if you have any question, comment, compliment, you can send all that feedback to 20316, which is our SMS line, or 0786 316 316, our WhatsApp line, and we're here to learn together and to answer your questions. Karibuni ladies, it's good to have you here this morning. All colorful, looking very nice. Yeah?
Thank you.
Yeah, probably we'll start by introducing ourselves. I'll start with you, Linda.
Okay, so my name is Linda Makatiani. I am a financial literacy trainer. I'm an investing coach and the founder of Finance for Families, where we build financial confidence and help families create generational wealth. I am also a mother of 3 and a client of NCBA. I've been a client of NCBA for the past 16 years.
Awesome.
And yeah, I'm very happy to be here,
Karibu
part of
sana.
this powerful conversation.
Karibu sana.
Thank you.
Eva.
I'm Eva Njuguna, Head of Trading at NCBA Investment Bank.
Let's just start with the basics, Eva. We're here talking about the power of compound interest. Just to start us off, someone who is watching us or even listening, what is compound interest?
Okay, thank you, Limo. Compound interest, just by the term interest, sounds complex. So maybe it may be better to start by explaining what compounding is.
Right.
And compounding really means that the earnings from an initial investment and is reinvested to earn an additional interest or additional earnings. So what it means is that there is a multiplication effect, that the initial investment is then invested, earns some return, and that return is reinvested. So the earnings are multiplying.
Wow.
Yes.
That is really compound, indeed, quite compounded.
Yes.
Linda, to you, you're a client, a customer,
Yes.
At NCBA. What do you understand by compound interest as now from a customer's point of view?
From me, I always look at it from the analogy of like a tree. So you're like, if you're a farmer, I'll go to NCBA and I have this seed that I want to plant, and I plant it at NCBA. That seed bears, grows, it bears fruit, and that fruit falls on the ground, and the fruit has seeds, then those seeds are rooted on the ground, and the seeds now bear more fruits. So for me, it's just, that's the way Eva has explained it.
Okay.
You'd go, you'd put some money there, and the money you've put there, they put it to work on my behalf. Yeah, and the work that now my money is doing at NCB earns some interest.
Okay.
And the next time I'm coming to look, I see I'd put my 2,000 shillings, but that 2,000 shillings has been put to work, and it's earned some few hundreds.
Yeah.
So now my account balance looks better than the last time that I checked it.
Wow.
So
and there's a smile on your face at that point.
Yes,
fantastic,
definitely.
Lovely. Eva, in the previous clip that we listened to, we all, not we all know, the compound interest is known as also the eighth wonder of the world.
Sure.
And you said if that was the case, then all of us would be rich, isn't it? First, why is it called the eighth wonder of the world?
There are many wonders of the world. We know of 7, but this particular one is referred or has its own attribute as being the eighth wonder of the world.
Yeah.
And given that there's 7 wonders of either the ancient times, the Middle Ages, and the current times are well known, I assume the eighth wonder is also well known. And so to me, it's still a paradox. If it is known, then why aren't we practicing it, or why aren't we benefiting from it? It would be referred to as the eighth world wonder, in my view, because of the mechanics of how it operates.
Okay.
Because that multiplication effect, as I explained earlier, is what renders it as, phenomenal, like it's awe-striking.
Okay.
Yes, that's what I would say, in that it is not common, as Linda says, to plant a tree, successfully grows, fruits fall onto the ground, the fruit has seed, and the seeds grow again.
Yeah.
We tend to have a bit of upheavals. The fruit may fall, the soil is not palatable for the growth, or the seeds themselves die off.
Okay.
But in the simple explanation of compounding, the presumption is that all goes well. And then that's why it would then be considered, or is considered, a wonder.
Magical. Wow. Okay, Linda, this fruit, how have you benefited? What are those fruits that you've benefited as a person on when it comes to compounding?
So I said I'm a mother. I have 3. And for me, the benefit is just not for me. I'm very keen on growing family wealth.
Yeah.
So when I had my first daughter, I opened an account with NCBA for her, specifically for her. Later on, I started investing on her behalf. And she's 14 now. And it's through those 13 years, seeing the little small investments that I have been making over time into her account, you know, buying a few stocks here and there for her as she grows, you know, getting the returns in form of dividends paid into her account. And now she's at a position where she's able to see how the holdings are growing, the portfolio that she has is growing. And yeah, so for myself as well, it's just being able to know that I don't have to have that much to put aside. I'm able to just save very little, but even as I'm putting aside the little that I have, there's some magic that is happening behind the scenes. And the little that I have is also growing. So it's been really, I would say really very beneficial to see that growth. And I think it's just the power of time as well, the power of patience over time that you get to see this benefit.
Okay.
Yeah.
I think we come to talk about time because I know it plays a very, very huge, you know, role when it comes to matters compounding. And Eva, do you have any financial products at NCBA that probably a customer may just acquire and help them build on the compound interest?
Yes, for sure. NCBA is a financial services provider. And picking up from where Linda has left, we start from the youngest, that is the children. We do have a children's account at NCBA. And interesting to note is that there are no charges on this account. And it is a savings account, meaning the initial investment grows and the earnings generated from that initial investment is also compounded. And this compounding for the children's account happens quarterly. And as a child grows, then they transition to what we refer to as the student's account. So at 18 years of age, as a parent, then you'd cede ownership to your child, but who now is a student, and he or she can run the student's account up to when they're just sub 30 years. And the student account now shifts a bit. There's a bit of a shift. It's a current account. The assumption is now the student is taking out money from what was previously a savings account to take care of their accommodation and other incidentals. So why at 30 does the account then change to what we'd consider normal accounts? It's presumed that at about 30, you then transition to the job market. You're now an employed individual. And for you to access loans, then you need to have what we'd call a normal bank account. We cannot lend, or NCBA does not lend against students' accounts. Remember, it's a current account. So if you look at the cycle, at the child level, your parent is putting money. So it's a savings account. During your student life, you're taking out money. It is presumed then you will have learned the lessons and you will be putting in money. So converting into probably a savings account or something else like a fixed deposit account, and then you're able then to take up more products. So we have that range in terms of age group. But we also have other products like within the investment bank, where we offer the unit trusts, both equities and fixed income. We do also offer direct trading in shares, direct trading in bonds or other fixed income securities. We also have insurance products within the bank, and insurance is very pertinent, and it is an investment product as well. And all this take into account the phenomenon of putting it an initial investment, accumulating it over time, as well as that the earnings generated from these products are then reinvested for the length of period that you have the product.
Linda, why NCBA? I mean, there's so many other financial institutions. Why NCBA really?
For me, money is very personal. So where my money goes is very important to me. And for me, I like the fact that with NCBA, we have a relationship. So it's not just about the products that they offer, which are good, but it's also the relationship that we create. Because you know, there's so much that happens in life. You're working, you're a parent, you want to save, you want to invest, and sometimes some of the other roles kind of take over, and you might have the best at heart. You're saying, yes, I want to start investing, I want to start saving for myself, for my children. But if you don't have a financial partner that motivates you through that, walks that journey with you, because again, it is a journey. It's not just a one-off thing. I come with money, I put there, and that's it. It's a journey that you walk together. I like the fact that for my brokerage accounts, on a monthly basis, I always get emails updating me what's happening in the economy, what stocks, what's happening with the listed companies. And you know, when I'm reading this, of course, I'm also motivated now to start thinking, okay, so I need to do something with the investments that I'm doing. So for me, that relationship, you know, them getting to understand this is the journey she's trying to walk, this is what she's trying to do with her investments, her savings, and when they know that, they're able to keep me in the loop, like what's going to happen, how is it going to affect my accounts. And that's why for 16 years, I am a very happy client. I refer most people to NCBA when they ask me, I have a baby, I'm trying to open an account. I'm like, this is it. Yes, and I talk from experience, so I'm able to share and recommend very confidently.
Yani, that smile just tells us like you're just in a space.
Oh no, I am happy. I hope they don't change. They only get better. But so far, I'm very happy with their service.
Okay, Eva, how you know? At some point, Linda mentioned something to do with timing. How important is timing? When it comes to compounding versus the amount of money one invests at the time?
Okay, timing is two-way, and most of the time it is an obstacle in terms of timing when to get in. But there is also the time aspect in terms of longevity. As we mentioned earlier, the presumption is that you have an initial investment. So as I said earlier, there's a question of when did I make the initial investment, and when do I make the initial investment, and into what do I make the initial investment. But generally, in terms of compounding, time in terms of longevity is one of the most important attributes, because you've got to give the investment time to grow. Just as a seed, or the analogy that she gave about the tree grows up, flowers, bears fruit, and the fruit falls to the ground. It also takes time to grow and then give more fruit. So time is very critical, and the longer the time, then it goes without saying, the higher the return. Holding all factors constant. Yes. Okay. I must qualify that. Yes.
Okay. Eva, you know, for someone watching you or watching us and even listening in, what advice would you give someone who's just out there and saying, that one must be a lot of money, you know, I have to, and that goes for Linda, because you started invest 16 years ago. Did you start small? Did you start big? And big is relative, you know. What advice do you have for someone watching?
I definitely started small. To be honest, when I opened, like, for my daughter's account, I started with 3,000 shillings. Just to be able to buy a few. You know, I told myself, if I don't start, I'll keep saying, I'll start when I have 10, or I'll start when I have 20. That will be a better amount. I can buy a lot more. But then I realized over time that little that I had and that more that I'm thinking about is actually going to come from the little that I have. And on that realization, I was like, okay, fine. So 3,000, I would get 2,000, 5,000 here. I would place there. And you get to see that grow over time, because again, I think the time factor now from a customer perspective, you know, I've had people who I've told them, just go and start saving there, then they would go. And after like a month or two, they'd be like, but I'm not seeing any returns, you know, and they want to remove their money. But I'm like, you know, if you think of it in terms of like a plant, when you put the seed in the ground, it has to take root first, and sometimes you don't see it sprouting up, but you have to be patient enough for the roots to take, you know, ground. Then now the plant now to start sprouting up before you even get to it growing to the stage where it has the fruits and everything. So that's the patient bit is very, very important. And for me, starting small, just start. I think when you start, and as I said, with NCBA, with them, they're very good at keeping you updated. Those are usually triggers for me. So if I get that and I have 2,000 shillings or I have 5,000 here, now I have 3. So I'm always thinking, whatever I have, can I just divide into the 3 and be able to put that? But once you start and you're patient enough, you get to see the benefits and the consistency as well. With however little that you have, makes a very big difference for me.
Yeah. Okay, so procrastination is a no-no?
Don't procrastinate. Just start. That 2, that 3, that 5 that you have is what will grow into that 50 or 100 that you think you need to wait to start with.
Okay.
Yeah.
Eva, apart from procrastination, what are the other mistakes that probably people make that negates now the benefits of compounding?
I wouldn't call them mistakes per se. I would call them perhaps success thieves. They steal from your success. And they're not just Kenyan. They're global, so they're universal blocks, blocking us from our success. And if you look at them keenly, they're centered around our emotions. It could be fear, it could be sorrow, it could be anger. There's even revenge and love. So in addition to procrastination, something else related to time is the analysis paralysis. Before I make a move, I want to know everything. And to avert that, then there's an acronym I use, KISS. Keep it simple, Simon. Only invest in what you understand. And you must not understand everything at your level. You can then rely on your financial advisor, or you can get into pooled funds where you have a fund manager looking after your funds. So all you're agreeing on is the rate of return, the frequency of it, and the reinvestment mandate. Another issue related to timing is, as Linda mentioned, is when to pull the trigger. And when to pull the trigger is now. If you look at the products that we offer both at NCBA and in the general market, we have investment options for even as little as 100 shillings. Because the idea is pull the trigger now, get it going. There are other impediments to this success. Some are related to emotions of love, and I can mention a few that come to mind immediately. Sometimes as individuals, we fall in love with a product. But I wish to remind us that people are the ones to be loved. But markets, be it trading, investments, are there to give you a return and a profit. So reserve love for people, but markets and products are there to give you a return. And then there is what I've observed as an individual, and I'm glad to learn that it's also universal, it's revenge. Markets are volatile, meaning your investments. Remember in our conversation earlier, one of the things we qualified is holding all factors constant. There is volatility. And like globally, I was looking at the S&P index. In the last about 20 years, the cumulative return or the compounded return is about 8%. But within those years, there have been years of high, years of low. Same case to our local market, example like in Kenya, where the cumulative return is actually in the negative double digits over the same period of time. But we have a year like 2024, where the net return in the market was 34%. And so when it comes to revenges, don't take it personal. So if markets didn't do well in regard to the product that you took up in a previous period, move on. And I like encouraging investors that roll up with the punches, you know, take out the lessons. And related to compounding is that everything compounds, even in terms of character. A bad experience this year builds your character, you know, and builds your understanding and knowledge in the product. And you're in a better position to make a wiser or a better decision next time. Yes.
You know, it's at this point that I always tell our viewers and listeners that, you know, please have your pen and notebooks with you, because these are free lessons, as in this is consultancy for free. You go to Eva's office, especially Linda, I think you'll be charging some amount there, isn't it? Awesome. Thank you so much for that, Eva. For you, Linda, what type of accounts or financial products do you have at NCBA, with NCBA, that help you grow your money over time?
So for me personally, as an individual, as an adult,
Yes.
I have a fixed income fund with NCBA. I also have a brokerage account for myself with NCBA, just being able to buy stocks in the various listed companies.
Yeah.
I invest directly for the bond, but of course when I invest, I have to pay for the bond via my bank, which is now NCBA, and I have to say it's one of they have the best app out there, very user-friendly, very simple to use. I've never had any hitches when I'm trying to pay for any bond that that I have. For my kids, I have the junior account, and then I also have a joint brokerage account for me and each of my children, which makes it easier for me sometimes, you know, when there's money and we have to sell something from the brokerage account, the money just goes directly into their baby's account and everything, to try and separate their money. Okay, it's my investment, but their money and my money. So not much. I have to be honest, I don't keep much in their savings account because I prefer to have it invested, at least to grow over time. But any interest that we get in terms of dividends and everything, I always prefer just to have it, to pack it in the account first before we reinvest it again.
Okay.
Yeah.
Wow. Eva, when it comes to, you know, fixed income, speak to the role of compounding when it comes to fixed income in terms of T-bills and all that. Yeah.
That's the simplest. Although I know that world of fixed income has a lot of jargon, like yield to maturity, coupon, even the term interest, principal. But it's actually the easiest because when it comes to fixed income securities, bonds, and T-bills, in essence, the government is a borrower, you are the lender.
Okay.
So the borrower has committed to give you a return of a certain percentage, and they commit upfront during what we refer to as auctions. So they commit to pay you that amount of interest per annum, but distribute it half yearly. Okay, so every 6 months you have your return. For example, if you invest, because the minimum investment amount for a T-bond and a T-bill is 50,000, for ease of computation, let me use 100,000.
Okay.
And the highest yielding bond in the market is at 18.46%.
Okay.
So if you had bought 100,000 of that, it means per annum you're receiving about 18,460,000 shillings. But that is distributed half yearly.
Okay.
And when it comes to compounding then, what happens is that because the borrower commits to pay you back as an individual, if you've invested directly, that interest is credited directly into your bank account.
Okay.
So it behoves you as an investor to go into your bank account, take that money out and redirect it to an investment, and either the same or an alternative investment opportunity. Okay? So that's what I would say about T-bills and T-bonds.
Okay.
The return is guaranteed. Globally, fixed income products tend to have the lowest level of returns because they're the safest. And they work well for a certain age group, especially as you age or as you get into your senior years. But when you're younger, you can take on a bit of more of risk.
All right.
Yes.
Okay. If I'm not a compounding expert today, I don't know what I'm doing here. Anyway, we're going to take a very short break and we'll come back into this amazing, you know, insightful and impactful conversation after a music break, and the song is Spend Alive. We'll be right back after this break with your feedback as well. So talk to us on 20316 SMS line, 0786 316 316 is our WhatsApp line. Send in your questions, comments, or even compliments to my beautiful guests.
Kote nchini matumaini, tujitahidi, tujivunie, tuendelee mbele. Twende mbele, mbele, mbele.
NCBA. Go for it.
Amazing. Welcome back to the power of compound interest here at Family Matters Financial Clinic, where we're having a short discussion here, and stop tagging people at their wash. Get to learn how people make money while they compound. Okay, anyway, let's go to our socials. Someone says here, good morning, Sally. One thing I love most about NCBA is how they create a relationship with their clients. That one, Linda, you mentioned, so it's being rubber stamped there. You feel safe banking with NCBA, always available for you when you need them, and offers consultation for every decision you wish to make with your money. They actually grow with you. Fantastic. Then there's someone asking a question, Eva, when are we getting the dividends for the investors in stocks for NCBA? Yeah, and then so there's a stocks, and then there's someone saying, good morning, Sally. I have been following financial show with NCBA. I would like to open an account for my children, as Eva has explained. Yeah, so probably you'll talk about the dividends and then opening of the account, Eva.
Okay, so the dividends for NCBA will be credited into customers' accounts in the month of May.
Okay.
Yeah, and NCBA is one of the highest yielding, or has the highest rate of return from a dividend perspective in our market today. Okay. So it's it's a viable investment, I would say.
And how much is it per share?
As of yesterday, it was at about 53, 54.
Okay, all right. And for there's someone who says they want to open an account, I think we'll share the details with you.
Yeah, but maybe I can mention that
Go ahead.
For bank accounts, you can access this at any of our 99 branches in Kenya.
Okay.
And cumulatively, we have about 125 branches in the East African region. So feel free. I keep encouraging customers or our potential clients, have face-to-face conversations. You get to learn more about our products and the services that we offer. Okay. Because one of the things we do at the initial interaction with a customer is that we profile your needs, so that whatever product then is offered to you matches your objectives.
Okay.
Yeah.
Because I don't want to leave anyone out, let no one feel left out when it comes to this very important topic of, I think, wealth building, isn't it? Someone is saying, good morning, Sally. Please ask Eva, what is the difference between compound interest and simple interest? And then who benefits more from compound interest, an investor or a borrower? And finally, how has Linda benefited from compound interest at NCBA Bank? So for you, Eva, two questions, or probably let's go to Linda first. Yeah. I think you had answered it, but probably they missed it. How have you benefited from compound interest compounding at NCBA?
Okay, so from an individual perspective, I have a fixed income fund with NCBA, and as I said, I also invest in bonds, but that I do directly. But anytime the CBK is paying coupon, then that coupon is directly credited into my account. And because I want to reinvest that, and I want to reinvest that in bonds, now I'm growing older, so I want more fixed income coming my way. So I pull that, and what I normally do is I would move it into the fixed income fund, and then now once at least it's a substantial amount, then I can be able to buy another bond. So remove it from the fund, buy another bond, like that. So then the interest that the bonds already have compounds there. So I park it there, so at least it's earning a bit of interest as well when it is in the fund. And then now later on, I'm also able to reinvest it in another bond, and from that I'm also earning interest. So you can see all the interest that all these investments are earning me. For my children, it's just the fact that I'm able to buy slowly stocks, small amounts, 500 here, 300 there for them, and with that you get to see. So you start off, you have 1,000 shares of this. In 3 years you have 4,000-5,000, and of course even if they pay you a shilling as dividend, initially we were getting 1,000 as dividend less the 5% withholding tax, and then now if you have 5,000, so you're getting 5,000 shillings. So with time, that also you can see how that is compounding. earning in itself. So for me, it's just that. For me, my interest is earning interest. Whatever interest I'm earning can come back to my NCBA account and earn even more interest.
Okay.
Yeah.
Eva, what's the difference between compound interest and simple interest for the viewer or listener who's asking?
Okay, thank you. So for both compound interest and simple interest, the similarity is that both earnings are earning you a return.
Okay.
The difference is that in simple interest, the earnings are just from your principal investment, the initial lump sum that you put in.
Okay.
Whereas for compound interest, the mother and the kids are bearing returns. So your initial investment, the earnings from that investment are all earning a return.
Okay.
And the mantra in both from an investment perspective is all profits are sacred.
Okay.
Whatever interest you earn or whatever return you earn, reinvest it. And that beats the analogy that you mentioned earlier of wash. Easy come, easy go.
Yeah.
And it does happen even in our world of investment. Sometimes markets could be favorable, and they're not favorable because they like you.
Yeah.
It is you got it right, got in at the right time,
Right.
and maybe got out at the right time. Now what you do with that return is treat it as sacred.
Okay.
You know, reinvest it, and you don't have to do it in the same product. We have an array of products, as earlier mentioned,
Okay.
to then maintain the whole rationale and aim of financial growth.
Eva, what are some of the biggest lessons or the most important lesson you've learned, you know, by just investing or saving with NCBA Bank?
That consistency beats intensity.
Okay.
Sometimes, you know, I get people who say, no, when I get this big lump sum, that's when I'll go and start.
Yeah.
But for me, it's being able to see from the 3,000, the 5,000 to where we are now and where we are going.
Yes.
Because where we are is not where I want to be, but it's also not where I was when I was starting out.
Right.
So just that, and being able to be patient enough with the whole process. And I think for me is also the fact that I always like talking about my journey.
Yeah.
Because I think I feel like we need to talk more on our financial journeys.
Right.
So people don't make assumptions like, okay, so now she's taking her child to America. She's not asking for any help. Hiyo ni pesa ya, you know, wametoa wapi hiyo pesa yote and all that stuff. So it's being able to share that this is what I'm doing, this is what I've been able to do, these are the lessons I've learned. And for me, it's encouraging everyone out there, if you're on this journey, you are investing, you are saving, talk to your children about that journey that you're going through, talk to the people around you, and that encourages them. Biggest lesson is just that consistency. Don't stop. Don't do it once and just wait for it to compound. It will compound even more when you are more consistent with it. You know, if you have a farm, you have to go and tend to it. Go weed out the things which, you know, can hamper your harvest and everything. So don't let it sit out. And as I said, that's why for me, I really like my relationship with NCBA because they are there. They help me to weed out some of these things that can really affect the returns that I'm getting.
Right.
Yeah.
Okay. We had spoken about matters financial literacy at some point. I think we've touched on that point. But Eva, then how does NCBA come in to just help, you know, your customers and most of the younger generation to get to learn and understand and even probably have long-term investments, you know, at NCBA when it comes to compounding?
Okay. So in terms of information dissemination, this is one of the platforms, and thank you Family Media for giving us this platform, and NCBA as well for investing in this. Judging even from the questions coming in is that we have people listening, people who are interested, and that's why we exist. And at NCBA we say that we don't just promise to deliver what is expected or what is impressive. We actually, our mantra is that we will deliver unexpectedly impressive results to you, both in terms of our products and in our services. And we do this even from a learning platform in terms of webinars, and they're on all our socials. We have face-to-face meetings like schemes. We can come into a company and train or take through your staff on the products available. And thirdly, you can also come to us as individuals through our branch network and our digital channels and interact with us. The basis of our interaction is that it's a conversation and align your goals or your objectives within the products that are offered to you.
Okay.
Yeah, and I must add that we promise to do this with a touch of elegance.
Fantastic, and love, a lot of love from what I'm hearing from Linda. Aya, now there's someone here asking, hi Sally, please ask our beautiful guests in studio if they have experienced any challenges with compound interest. Before going for it, I would first love to know if there are challenges or common mistakes that should be avoided for better returns. And I think Linda, you can take that.
I think one of them is that the returns, apart from the fixed income, where that is, it's agreed on onset and you're paid every half yearly. For other investments, the return is not guaranteed. It's based on the market cycles and everything. So it's coming in knowing that. At times, it's you'd come in and maybe now your investment is earning you a return of 15%, and then 6 months down the line, the return goes down to about 13%. So it's being aware that in as much as the return is not guaranteed, it's not fixed for most of these products, if it is going down, then how are you looking at it? So again, it's your mindset. If you're looking at it as an opportunity to be able to now come in and maybe get more. So for me, my experience has been in investing in stocks, especially, you come in, you buy a stock and you're buying it at 30 shillings, and your expectation is that it's going to go up to 40 or 50, and then things happen with the economy. Maybe the company now is not performing as well. They don't pay you as much dividend as they had paid last year. Some investors get upset and they're like, okay, now let me exit this company. So as they're exiting, the price comes down to 20 shillings, and now you're getting, you're thinking, oh my God, my 30 is now at 20 shillings. So it's also looking at it from the point of view that for me, if I'm in it for the long term, for my children, I want to pass on that portfolio to them when they turn 18 or 21, for them to manage it themselves. So it means if it's at 20 and she's only 14, my other one is 11, my boy is 6, then that means it's an opportunity for me to buy even more. So it's, for me, it's the mindset. The challenges are there. The returns are not guaranteed. That I can tell you from an investor point of view. Yes, but it's how you look at it as an opportunity and not really as an impediment to the returns that you're getting from your investment.
Fantastic. Thank you for that. And then someone is asking, this I believe is for Eva, can someone open a brokerage account if you want to buy offshore ETFs with NCBA, and how to do it kindly?
Yeah, the answer to that is yes. You can access offshore ETFs, exchange traded funds. That means you're accessing investment opportunities outside of the country, and most of these tend to be in developed markets. And you can do that through ourselves, through our wealth management. And you just reach out to us, either by visiting the branch, calling us, dropping us an email. All those are options of getting to us. And opening any account at NCBA is free of charge. And our interactions are free as well.
Please note. Okay. And then, wow, the interactions are just amazing. Some of the questions are just the questions I was going to ask, but my audience, I have some amazing viewers and listeners. They're saying, someone is saying, Sally, hi, kindly ask Linda which stocks she would advise someone to buy, Governor.
Oh, wow, interesting. Now, I would not advise someone to buy stocks because you would have to have a sit down to get to know why are you buying the stocks, you know, what's your risk profile, and these are things in my capacity as a coach, or even if you go to NCBA, they would be able to do that. That's why Eva is saying the account opening is free, the interaction is also free. You go there, they will profile you, they'll get to understand, okay, so what is your aim, what's your goal for the investment, because it's very different. We have stocks that are listed that are very good stable stocks. They are not as volatile as others. So if you're older, then of course I would say, yeah, those maybe are the ones you would consider buying. If you're younger, there are those ones which are on the growth trajectory. So a bit more volatile, but if you're younger and you're able to stomach the risk, then of course those would be the ones then I would say you buy. But for me, I think it's also very important before you buy, you get to understand your own investor profile. And you're able to do that by sitting with a financial advisor to get to understand. But yes, what I would say is there are about 62 stocks that are listed in various sectors of the economy. All of them give you varied returns. So you would not miss something to buy based on your investor profile, your age, your risk capacity, the duration that you want to stay invested, and all that. So that is more important than the stocks. That comes first before the stocks that you buy.
I'm sure Governor Zon would ask that question.
Reach out.
I may add as well.
Yes, as you know, as we're wrapping up, I think time.
You can also on a monthly basis, we do send out what we refer to as our monthly stock picks. It's on our NCBA Investment Bank website, which is quite resourceful. At least you can go through, because if one is not a novice in this area, then we have guidelines on why each of them is viable, with target prices, what we think is driving the business that makes it viable as an investment. So please visit us on the website. I think that will be your parting shot, that people should visit on the website. Is that it? The NCBA Investment Bank.
NCBA
Investment Bank website.
Fantastic. Thank you so much, ladies. Thank you so much for making time to be here, for enlightening us, you've taken us through a class. This is a full class. Asanteni sana. And more so to you, Eva. By the way, for those who don't know, Eva is our partner here. She called it compounded love. We're talking about compound interest. You said compounded love. Asante sana for being a partner. Linda, thank you so much, and I know you're also going to be looked into our partnership, isn't it? Thank you so much to our viewers, listeners, wherever you are this morning. Thank you for giving us your time, investing in us in that way. We want to say asante sana, and also for the feedback, comments, and compliment that you've sent our way. Tunasema asante sana, and also that special group of people called partners who are out there that have been supporting us for the last 25 years. Thank you so much, and if you want to be part of this impactful community that's just making a difference in someone's life each and every day here from Family Media, then we want to urge you to join in. Send the word partner to 20316 or 0786 316 316, our WhatsApp line. Send the word partner, and someone from our team will be able to reach out and just engage you on matters partnership. And also, if you want to just support us in any way, you can do that by sending your support to 316 316, our pay bill number, and the account number shall be your telephone number. God bless you and keep you. See you again tomorrow on Relationship Clinic, where we'll be talking about what love builds. You don't want to miss that. See you tomorrow. God bless you.